Bombay Stock Exchange, which is Asia's oldest stock exchange, will be open for subscription from today. To talk about that and more, I have with me Mr. Ashish Kumar Chauhan, the MD and CEO of BSE. Thank you, sir, for joining us. So the IPO is listed at an attractive price. So what kind of response are you expecting?
So basically, as an exchange, we do this practically every day. We are on the other side of the table, but this time it's us. So, but if effectively we are very comfortable of what is happening, and we recently had a anchor book also, which has been now allotted, and so we think there is sort of good demand. We have done the road shows not only in India but various places abroad. So overall, I think we think it's a good situation, and there are many investors who had never invested in India. Some of the marquee names, even universities who had not invested in India before, have kind of come in to join the anchor book. So I think, and it basically speaks a lot about India, also saying that India is becoming attractive as a good destination for investments.
Right. So, but over the period of time, like your revenues from investments have gone down and the transaction revenue has gone up. So how do you plan to increase that revenue?
See, basically, traditionally, we had very large money on our balance sheet, and so our revenues from interest or treasury income, as we call it, used to be very large. And slowly, over last 5 years, we have restructured ourselves. So some of the money we have returned back to the members by reducing the charges for deposits from 1 crore to 10 lakhs. So almost 300 crore we had to give away there. Also, we had to set up a new clearing corporation over last 5 years, and so some of the funds have gone there. And on the other side, there has been a reasonable increase in the transaction charges we have been getting because markets have gone up. Also, the listing fees have also done well because of the IPOs have been going nicely, and there are larger number of companies and so on and so forth. Data dissemination fees, depository services have been doing well because again markets have been doing well, and lot more people are coming into the market. So overall, if the way I look at it is going forward, if India grows and larger number of investors come into the market, overall I think the exchange and depositories and all will have probably more number of transactions and more sort of revenues from operating income going forward.
So although the revenues have increased over the years, but the margins have continued to decline. So is there any plan to counter that, like increase the margins?
So basically what happens is we are a highly regulated body, and in over last 3-4 years we were basically also having a regulations by which we had to pay 25% of our profits to, and not only us but any exchange in India had to pay 25% of the exchange profits to a settlement guarantee fund, and similarly the depositories had to pay 25% of their profits to the investor protection fund. Recently that regulation has changed, and the depositories have to give only 5% of their profits to investor protection fund, and exchanges related requirements have been taken off. So overall, I think there has been some relief on that count, which has seen our profit margins increase substantially over the first half of this year. If you recall, last year, the entire year, we had made a profit of 122 crores. This year, first half alone, we have made 104 crore rupees profit. So effectively, you can see that margins have improved, and of course, because the transactions have improved, the overall profitability has also improved.
In your prospectus, you have mentioned that you will be reducing the stake in the CDSL segment, which can impact your top line. So can you tell us the quantum of this impact?
See, CDSL is a substantial, important subsidiary for BSE, and we own currently around 50%, little more than 50% in CDSL, and as per the regulations, we have to bring it down to 24%. So we have to sell 26%. That's how we have tried to go through offer for sale route, and as and when its offer for sale comes, it will list. If it's a subsidiary, you are allowed to do consolidation on the top line basis and bottom line basis. But if a company stops being subsidiary, you consolidate only to the extent you get on the bottom line basis in terms of the profit share and so on and so forth. And so that's what we will have to sort of do going forward. But when we sell our stake there, we also get some money out, which will be utilized or in other businesses to get some sort of returns. So effectively, I don't see that having too much of impact on our sort of top line or bottom line going forward.
So on CDSL only, like, so there are plans of coming up with an IPO for that section as well. So can you give us any timeline or any any plans on how much money are you planning to raise?
See, basically, it's a book build issue. We are trying to sell our 26%, but there are other shareholders of CDSL who also might be selling some of their stakes. And we are also exiting partially. Some of them may exit partially. And that's how we see it. We do not know what kind of demand will be there. As and when the sort of approvals come, then the book will be built and they will figure out what kind of amounts are coming into sort of our kitty.
You're betting big on GIFT City as well. So please tell us, like, could you elaborate more on, what instruments are traded on it, who are allowed to trade on the exchange?
See, basically, GIFT City is an interesting concept. It's India's first international financial services center. You can conceptualize it as a Hong Kong in China. Hong Kong traditionally was under British control, so they had a British system, and China was having a different law and different activities. But over the last 30-40 years, Hong Kong has provided almost more than few $1 trillion of investments that have been routed through Hong Kong into China. And similarly, if India has to grow at the pace it is wanting to grow, it has to also attract a lot of foreign funds and so on and so forth.
Right.
That's why this GIFT City can act as a Hong Kong, what Hong Kong has acted as for China, it can act as a kind of Hong Kong for India. And that's where BSE was invited to set up an exchange there. Honorable Prime Minister of India, Shri Narendra Modi, inaugurated that on January 9th. And there in his speech said that in first phase, it should trade in commodities, currencies, interest rate and equity derivatives. And then second phase, it should trade in masala bonds and sort of dollar denominated bonds and so on and so forth. So effectively, as and when the approvals come from regulators, all these things would start trading. Currently, they have started trading in Sensex 30, Sensex 50, and also foreign stock futures and options like Google and Apple and so on and so forth.
Speaking about derivatives, like, are there any plans to increase the market share, considering it's like a struggling point for you?
Yes, it is basically in last 5 years, whatever has been newly allowed, we have taken large market share. So if you see SME segment, if you see mutual fund distribution through exchanges, if you see bond distribution, in fact, bond distribution has been a very surprise success. In last 7 months alone, we have raised 135,000 crore for Indian corporates, which is like unheard of before. Various reasons, but effectively, BSE has been very, very large in those segments, and they have been recently allowed. Similarly, offer to sell, offer to buy. In traditional segments like listings, BSE has been very, very good. Even in IPOs, BSE collects more funds. Effectively, BSE positioned itself knowingly, unknowingly in what I call investment areas. It didn't position itself well in what I call speculative areas. We realized this over last 3-4 years, and we said we also need to be in speculative areas also, because that is what media is excited about. That's what people want to talk about. And so we started trading in currency derivatives. We were 0% in 2013, but in 3 years time now we are almost 39% of market share in currency derivatives. We also have gathered a large market share in interest rate derivatives. So effectively, even the older, what I call more speculative areas, we are slowly gaining inroads. And equity derivatives and equity trading, if you trade in equity derivatives, you trade equity in that same exchange, and that's where we have been not very successful there. But with GIFT City coming into play, many other newer plans like commodities and other things, we think we will have a very nice balance of investments and speculative both activities going forward.
And finally, sir, now that you will be listed, do you fear increased SEBI intervention?
See, basically, the regulator's job is to ensure that we serve the purpose for which we are set up. We are highly regulated. Our main job is compliance. And if we continue to do that, we do not see any intervention that is basically against the interest, because we also have to be disciplined to understand that our job is to take care of people's interest and also align our activities with the society's interest. So currently the Honorable Prime Minister in the same speech on January 9 while inaugurating India International Exchange said that India needs to create 30 crore new jobs for next 20 years, and the corporates will basically create those jobs. So we need to raise funds for those corporates so that they can create those jobs, and that's what we think. If we can align our interest in more compliance, more what society needs, overall we do not see much of an issue going forward with any new regulations.
All right, thank you so much for speaking to Bloomberg Quint, and good luck.
Thank you.